Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Monday, December 30th, 2024. It's 10:04 a.m. Eastern Time as I'm starting the video, so we're about half hour into the trading day. Two more trading days left in the year. Obviously, we've got big New Year's tomorrow. So let's just, I'll give you quick updates, just let you know what I'm doing, what I'm watching. Well, you know what I'm watching. Same stuff. No new developments to really report. This is QQQ on a daily time frame, primary uptrend line. Holiday whipsaws. You know the whole. Well, will the real whipsaw please stand up? You know, you had the pre-Christmas breakdown, and then the lowest, pretty much the lowest trading volume day, possibly the whole year, most likely. As I said back then on December 24th, an abbreviated trading session, and Christmas Eve, of course. So I said, if you take that one with a grain of salt, take this one with a huge grain of salt. That recovery back above the trend line. So it didn't stick. Again, it technically was, like I said, technically significant. The fact they took back the trend line, insignificant because it was far from confirmed on volume and very suspicious. And we're back to where we were. And as I said last week, just watch those recent lows. That's probably where the a lot of stops are set. You have the 50-day moving averages. My guess right now, just based on the intraday charts, the 15-minute chart's a great swing trading time frame. It's one of my favorites. I've been doing this, so you can see here we had a divergent high most recently there. Nice drop down into that divergent low. They're not all labeled. That was, you can see my divergence lines drawn. Just I didn't put the DL there. DL bounce, divergent high drop, and divergent low here coming up on support too. So my 2 cents is we'll bounce anywhere from where I'm doing this video right now down to here. This is the better level if we get there, but there's also a little reaction here. And this is just, I don't even want to say this anymore. I had a couple comments, or one comment last week about covered in the video. Posted the setup in the morning showing the arrows going up, a bounce likely, told you I reversed, and then somebody said, when did we reverse? I do me. I'm an active trader. You do you. This site's mostly about swing trading. But me personally, I covered the shorts, nibbled, the shorts that I came into the day with, nibbled, and I will add down here if we get there. So I just took a small position because that's, like I said, that's even better support. But the way I analyze it or view it is, about another 1/3% downside with the divergence already in place. And so just looking to game a quick bounce, and I'll kind of follow the intraday charts as we go here. 5 minutes, 15 minutes is a go-to time frame. SPY as well, the S&P 500, you can see the same thing. They're not one's not marked up because I typically trade the NASDAQ 100, but you had that big divergent high. You can see the divergence line down at the bottom here. Where am I at? Let me try to grab my drawing tools, make the color correct here, give you a bright color. That's it. Divergent high, divergent low, rally, divergent high, correction, divergent low at support right there. And so chances are, with us being down about 1.6%, 3% is usually about it, unless there's just something like really bad news on some financial institution or something else out there. So that's it, guys. It's don't want to beat a dead horse. Looks like about another, from today's lows, about maybe 1/3% or so downside is the most probable scenario. Nat gas I also just reversed as well, even though, and I've been harping and been very consistent on maintaining that just sub $5 target. I'm targeting the $5 area. We'll cover just shy of that for all my core swing positions, but in my active trading account I do actively trade. Why did I do that? We were up 24%, I think it was. A little bit more than that on natural gas future, about 24%. I've been doing this for years, and I've seen natural gas do that. I warn everybody. I call it the widowmaker. I mean, hopefully the warning was add to your longs last night when we had the breakout, which I did because that was the breakout we were looking for. Let me grab that chart. Okay. That's the breakout above this level. Again, I've been walking through this trade almost play by play, day by day. We had broken out previously on the January contracts, and February. We took that out last night on a gap up. We were up, I think, when I posted that about 15% or so. Again, I'm just sharing you tidbits I've learned over the years. I know there's a lot of you out there, especially if you're new to trading, might say, "Oh, crazy! I'm not going to add to something that's up 15%." It was a big level, number one, and it's natural gas, and so 15% or oversold. If just when you think it can't get any more oversold, that's what natural gas does. So either way, it was an objective add-on because it was a breakout last night. Had it would have been if we pulled back and back tested the trend line, which we never did. Natural gas has a way of just trapping in the shorts and just roasting them. Or when it's going down, same thing in reverse. When I'm short, bearish, it has I always call it a trendy little sucker. It tends to go in one direction. And so what it did here, it didn't let the shorts out last night or today. And especially, and again, I've over the years, I've said this many times. I know some of you don't trade futures. I get it. You don't have the futures account or the capital requirements to do it. But what happens to folks that trade via ETFs like UNG, you didn't see this last night. Futures, to me, even the stock futures, I always say it's kind of like having X-ray vision. You can see what's happening around the clock and kind of what may happen the next day. UNG traders woke up this morning to, I think UNG is currently up 21% right now. See, there it is. Good. We got the little turn. I'm just looking for a little pullback, about a 5-6% pullback. I'll cover that and then get back in and continue to ride up to that long-term target I've been giving you on the weekly chart. But so what happens there is UNG traders just they get trapped in here if they're short, that is, or natural gas ETF ETN traders, and then you get that big powerful short squeeze going on. Had you, let's just say, been bearish natural gas for whatever reason, you saw that breakout last night in the futures, which is about the midpoint here. We continue to build on that. Maybe it was around my T6 level. I don't know, because again, you'd have to correlate the two charts, but you could have stopped out. And natural gas, like I said, went from I don't know, 13-14%, whatever it was in that chart I screenshotted last night. The values are always there, up to about a 25% gain so far today. And that is, again, very close to a daily cap. These are the targets I've maintained here all the way back. We were buying nat gas off the bottom, off the lows recently, $1.50 in the futures, down around there. But these are the charts. It's been a bottoming process with multiple pullbacks to that level there. And we had, I'd given you back then 8 total targets. And always say that it's best to align the targets on UNG with those on NG, natural gas futures. Because again, over time, the futures are going to roll. We have different contracts. Every time we rolled from the January to the February, I showed you the levels are different. And so you just need to know over time the horizontal price support and resistance levels are going to kind of drift, if you will, for lack of a better term. When you're trading a short-term chart, it works great. But with that being said, a lot of traders trade ETNs, ETFs. I know that to be true. I know it with natural gas. I know it with gold, things like that, GLD, even hedge funds will use GLD instead of gold futures at times. I've certainly read up on that quite a bit. But you can see the downtrend line I gave you on UNG. The primary downtrend trend line was taken out here, back tested, and that secondary trend line that I gave you in previous charts right here, that's been popped as well as this 1776 resistance level. So it's all smooth sailing. A little pullback. Again, I'm just talking active trader hat. I encourage you not to try to do what's not in your skill sets. Still maintain the longer term target, which I'll show you. That's right here, just shy of this line here. So pretty much for most of this year, that's been my target. And this is an end of day chart. So this was updated on Friday. We're way up here now. Natural gas hit about 420 today. So this candle, if it was live, would be up here. That's a solid breakout. So any back test to that level, if we get it. I don't think we will. One thing I try to do, and I think I do a good job of, is not only throwing out price targets. You watch, you turn on Bubble TV, CNBC. You're going to hear, analysts give you rough price targets, and they don't say when it's going to get there. It's just their price target. What I try to do is give price targets, but also how it's going to get there. The levels, and as I've been saying, I suspect it'll be a relatively swift run up once what I was stating and maintained is once we took that level out. Now we did. We took that's that previous high, that resistance zone. I've had this here for actually years, this resistance zone. So we took the top out of it today, and we took it out impulsive. In fact, in one fell swoop, we're already halfway up there. So again, and the bottom line is to remember this: there are no guarantees. Just because so far this has played out doesn't guarantee we're going to get there. That's what stops are for. Natural gas, is volatile. It can come all the way back here down to 250, and it still comes to this uptrend line, and that would be a heck of a drop. So anyway, trade it as you want to trade. Just know that right now, capping out about a 25% gain so far today. Again, from my experience, that's about it. There's just natural forces. Rubber band can only stretch so far before it snaps back. So another way to say this, I wouldn't be chasing it up 25%. If anything, as an active trader, booking some profits, looking to recycle back in, maybe taking some off, or trailing stops. It may just continue to run on right up there. That level's a hair shy of $5, and we'll see. And I'm certainly open to more. Again, I've covered this many times. Based on the divergences, and the scope of these divergences, a lot bigger than these previous divergences, which all have accounted for rallies ranging, averaging north of 200%, everyone going back for years to 2005. So we're up, I don't know, maybe about that now. I haven't updated my measurement tools. I'll do that later. All right, let's move on to the other stuff. Treasury bonds. Another just a great example. If you followed the Treasury trades, I know a lot don't take Treasuries. I say that only just looking at the comment sections under posts. I think most people probably think Treasuries are boring. It's something grandma should buy. If you're going to trade them, and I always state, and I did on the previous trades, and I usually do, a beta adjusted position size. They trade great to the technicals, and overall, my calls have been better than the stock market, better than just about everything on Treasuries. We've been in at every major low, every inflection point, like within basis points or within a couple percent point or two, a couple percentage points at most, out at the tops and or short at the tops. And in other words, my point, guys, I'm not trying to boast on the success of these trades, but they trade well to the technicals, at least my style of technical analysis. And not every time, but a lot of the times I put them on, they've been what I call indirect hedges to equity longs or shorts. So what I mean by that in this case, we've been short equities. We had the bearish engulfing candles on QQQ, solid sell signals. Those are still very much intact, by the way, for long-term trade. So nothing's changed there. But what that will mean is today is a great example where we're positive by about 1% on TLT and the CB futures, if you're trading futures, and yet the stock market or the Qs, so my preferred index is down. It's bounced just a hair since then, but close to 2%. And that's a case that's why I do indirect hedges. As I repeatedly say, I'll only take a trade if the charts look good. I won't go long or short Treasuries just because I'm trying to hedge up a position in the SPY or QQQ or NQ or whatever I'm trading. No, both charts have to look good on their own, and then I will often use those again as an indirect hedge where if one moves, the other should move in the other direction. But if the charts align, and there are periods that two correlated assets, in this case they're inversely correlated, there are periods where that correlation doesn't exist, and that's what we're going for here. So again, it tends to, and it has often worked out where the markets, if I'm long the markets and the stock market's down, then my Treasuries are up, vice versa. We'll see if it pans out. All I can tell you, it's a trade on itself. if you want it, or an indirect hedge. The targets I gave you last week, this trade was laid out Monday before we broke out because my confidence was and still, well, was high enough that we would break out. We broke out. Look, we're not off to the races. It's a decent move. 1%'s a good move in a day. For treasuries, they go up a little more than that. And I gave you a level right there on the futures, right about there. If we can pop that, that should open the door to T1. And the other thing to that, again, the fact that the volatility is relatively low compared to the S&P 500. I always talk about beta adjusting, taking at least a double position size. So effectively, then you're up 2% right now on TLT. By that I mean if you normally take a $10,000 position in QQQ or SPY, you take a $25,000 position in TLT, because on a bad day it goes down less and on a good day it goes up less. But it's all in this game, it's all about the dollar gain or losses. Nobody, you can make a 30% or even a 50% trade on a penny stock, but if you only put in a few $100 or a couple $1,000, it might not be much to you, right? Nobody's going to go broke taking a 20% loss on something they only put a very small amount of their money in. So it's all about the dollars at the end of the day. That's, on portfolio management. And that number is your number. Just spread your bets. And then again, on volatile assets like natural gas and Bitcoin, you don't put in as much as you put into Procter & Gamble or Coca-Cola or SPY for that matter. Let me just cover one more, get the video out to you guys. Wheat's looking, continue to perk up, looking ready to poise for the breakout. Last couple charts I updated you. I'll give you this 6-month chart, 2-hour candles, primary downtrend line. This is ZW Wheat Futures. Again, setting up for what I believe to be a nice long-term swing or trend trade, similar to natural gas, looking for a significant bottom after what I believe to be the first big corrective wave in a new bull market. Again, covered that in many past videos. If you want an update, let me know. That was the last divergent low right there on the 60-minute chart. And that's it. So we're pushing, getting close to the breakout. We're on the trend line now. Let's just look at wheat. WEAT, for those of you that prefer the ETFs, ETNs, same thing. I have the same trend line here, and you can see we're testing it right now, coming off a divergent low. So a solid break, especially a solid close above that, should open the door for the move up to the higher targets, just like natural gas. Very similar chart, looking for a bottom. It's been pounding out. It's been holding that level on the 60-minute chart. So we get these. Again, similar to natural gas, you get these runs up. Each one of them had the potential to be the bottom, but each time we set up, we had targets were hit where reactions were likely. In this case, divergent highs. We had another pullback down to the recent lows. And wheat, as I mentioned, is just above a very significant long-term uptrend line that if it has a marginal low from here, not only will it not change my outlook, I'll even like it better if it happens to hit that long-term trend line. I don't have that chart queued up now, but you don't have to hit that. We're still at, we're at long-term price support. And again, I still maintain these longer-term targets. And just wanted to point out that wheat, if we can build on these gains, as I like to say, resistance is resistance until less taken out. So I'll probably step in and sell it for at least a little bit there. There's a gap, but just watch. A break above today's highs should do the trick and break us out there. And it still has a little catching up to do to corn and soybeans. They tend to move together. Corn also is testing that level I covered in the last couple updates here, 1882. It's a spacing pattern here. It's already broken out of its downtrend line. So I think the grains are about to let loose if they can just punch out a little bit, maybe, I don't know, 3-5% should do the trick. But as of now, at resistance, just wanted to point that out. All right, let me wrap the video up here, get it out to you guys. And as always, if I see anything else that stands out, I'll get it out to you. And if you want an update on anything, just post a request or a question in the comments section below this or any of the recent posts, and I'll try to get back to you ASAP. This has been Randy Finney with Right Side of the Chart. Have a great day.